One. Boom! What's going on, guys? Welcome into Energy Newsbeat here on this gorgeous Thursday, January 21st, 2021. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsbeat.com. Stuart Turley, how you doing today, my man?
It's a beautiful day in the neighborhood, and we are just absolutely packed today.
I don't know how your head hasn't fallen off yet, because you've been absolutely spinning with all of the stories. You can check out what we've got via the rundown to my left here. But first, guys, just subscribe to this YouTube channel. Hit that pesky notifications button. I say this every day, but if I was a 16-year-old making millions off YouTube, I would scream, smash that like button. But I will refrain from doing that and just say thank you for checking us out on YouTube. Also, go to www.energynewsbeat.com. Hit the little notifications button in the bottom. It's basically a stream of consciousness of every single story we get. The best way to stay updated on everything going around in the energy industry. First full day of the Biden administration, and markets, continue on. I think people, if you're expecting a massive change about how companies are evaluated because of Joe Biden, I don't think that's going to happen. Tesla is still zooming upward. It's still trading 500 times EBITDA. So the way some of these valuations are happening, I don't think it's going to change with the new administration. But top line numbers today for the first day of the Biden administration: SPY was up to 10th of a percentage point. Nasdaq up 0.8 of a percentage point. That's off the back of Apple popping 3 percentage points. Look like they're going to have some good numbers. Dow Jones is only up about 0.2 of a percentage point. Like I said, Apple was the big reason you see Nasdaq fling up. They popped 3 percentage points. Apple's, let's take a look here. Analyst Kathy Herbie from Morgan Stanley said she expects a record December quarter print for the tech giant. So, that's, again, a lot of these big companies, Apple, Microsoft, Facebook, as we see these earnings come out, you could see some very weird, why is Dow Jones up large, but the Nasdaq and SPY stay slim? Well, it just has a lot to do with what earnings are coming out. The Nasdaq was up really high yesterday. Why? Well, it had 12. It was like 16 percentage points for Netflix. So just as we roll into earnings season here on our top line numbers, just know what's dropping to prepare yourself on either side. We also got a little bit more of an idea of the COVID plan for the first full days in office. 10 executive orders and Joe Biden's intent to use the Defense Production Act to ramp up PPE protection. They say protective equipment. They spelled it on the notes I'm reading. It spelled wrong on CNBC. Protective equipment production. No. It's PPE, baby. PPE. He also something I also did see, and Dr. Anthony Fauci, who is now kind of the head of the he's reinstalled as the head of the coronavirus. He came out and said it looks like the Johnson & Johnson data looks okay to go ahead. So we might probably have a third COVID vaccine. Their goal is 100 million vaccines in the next 3 weeks, in the next 3 months. I'd be skeptical if that happens. Enough with the top line equities. Nobody really cares about them. Also, just if you're wondering, Bitcoin down huge today. At one point down 12 percentage points, currently trading about 8.3 percentage points down, $32,000. So if you're out there trading Bitcoin, not a good day for you guys. On the crude oil side, things were pretty flat. Normally we expected API numbers to drop, normally we have crude oil API drop Tuesday, EIA Wednesday for crude oil, and then usually we have natural gas stocks day. With Martin Luther King Day, crude oil and natural gas actually dropped tomorrow. Yesterday, the API numbers dropped. We actually saw a little bit of a bearish build, which is not good. 2.56 million barrels, and so that kind of pulled markets back, which will really enjoying this vaccine news, because right now crude oil, OPEC, and vaccines are the two biggest bulls carrying this market. The other side of the equation is the API data and just some of the fundamentals. That's your bear case. Two struggling there. Bears did win, even though that top line headline was up 0.3 of a percentage point. Crude oil currently trading at 53.13. Back into the curve, about 0.2 on the downside, 50.96. Natural gas just gone through a fat cold streak, down 1.8 percentage points, $2.49. Can't say I'm too shocked, as again, right now, these winter months, you're playing weather. We're in a draw season. Stocks mean a little bit, but you're playing weather right here. And it's been just, we haven't seen the cold weather that normally happens. Call it global warming, call it cycles, doesn't matter. Point is, weather reports aren't pricing it in. Back end of the curve, $2.81. That's only about 1% on the downside. XOP was our E&P securities contract. Woof, slaughtered today, Stu. Down 3.5 percentage points. Oilfield services led by Baker Hughes earning today. Dropped 4.3 percentage points. Give you an idea how Baker Hughes earnings went. Top line OIH down 4.3 percentage points. Currently trading 169.27. Let's go ahead and look at some of our equities on the downside. Texaco Gas down 10 percentage points. Matador Resources down 10 percentage points. Sandridge down 10 percentage points. Peabody Energy down 12 percentage points. Offshore oil company Murphy Oil down 14 percentage points. And why? We'll tell you about that with one of my stories that I've got coming up here. On the upside, for a second, Next State Corporation, they're up 3 percentage points. Telrinian up 5.2 percentage points after one of their new projects just came back online. Good follow on LinkedIn guy, Steve Reese. He's the guy who showed me his Telrinian, their new gas export over in Oklahoma, back online. Good. That's one of the reasons you're seeing you're seeing Telrinian up. Sundance, 6.8%. I thought that originally said Sandridge. Like, how were they the winner and the loser today? I was like, that doesn't make any sense. I know it's been a long day, but man, it's just getting me. So Sundance, they're up 6.8 percentage points. American Resources Corporation, go America, up 7 points. And Barnwell Industries up 26 percentage points. All right, Stu, I'm buckling in. What's on the international news desk again today?
One of these days, Michael, I got to learn how to talk like you. I have all the respect in the world for you. Hats off for you. Okay, first up, coming around the corner, Michael, we have Aramco. First off, I really like the management of Aramco. They usually have things spot on, but Aramco omits carbon data for up to half of its real climate toll. But this is systemic of not only Aramco, it's all of the other majors.
Yep.
Before it's launched, let me read you a couple quotes in this Nuggets. Before it launched, the world's biggest public listing, Saudi Arabian company, promised potential investors a small piece of the trillion-dollar company, not in sheer numbers, but in climate friendliness as well, too. You come in here and it says, they adjusted these calculations for foreign facilities, and here's where it got them: 75 million tons and 113 million tons. That's the difference of what they're claiming versus what they're producing. That got them.
I love our friends in Saudi Arabia, but am I terribly shocked they're cutting emissions data? No.
All of the, I'm not dogging on Aramco. Everybody is. And you and I talked about the whole list is here with Exxon and everybody else. Everybody. This comes up into the next nugget in the article, and that's the ESG indexes that are out there. You have nailed it in the past, Michael, that there is no way there is a standardization of ESG and how it's reported. Well done in the past, Michael.
Wait, ESG reporting is it's something that in my spare time when I'm not educating the world on energy news, me and Stu, we work as consultants. A lot of the stuff we deal with is in these ESG regulations, is in this data stuff. You guys, you have no idea how quickly and how much these regulations change, the data you need, how hard it is to capture some of this data. I mean, it's not just people think it's as simple as, well, let's just go throw a sensor on my well. Well, no, it's not, because what do you do with the data afterwards? Now I've got this data, and now all of a sudden I've got 6 terabytes of big data floating around on the cloud. Ooh, the big bad cloud. So all of this stuff, it's coming down to someone's going to figure out how to report this data correctly. They're going to become the gold standard, and in my opinion, they're going to sell to Bloomberg for big bucks.
I agree. Funny story.
If anyone's listening to the show, call me up, Michael, sandstonecg.com.
Okay, here we go. Merkel, she's at it again. She tells Biden she's open to talks with Russia. Let's get the popcorn. And the reason for that is the Nord Stream 2 pipeline we talked about yesterday. Yep. Merkel wants it bad. She wants that pipeline to come on in. Quote, my basic position on the Nord Stream 2 hasn't changed. So pressure is now being put on for Biden to reverse the decision and the sanctions, like I told you yesterday.
It's
So
just
it's
our international brethren are screaming to us. We need pipelines. We need pipelines. We need pipelines. And it's not if Angela Merkel and Justin Trudeau are for pipelines, we all should be for pipelines.
okay. One thing, real quick, green energy needs pipelines, and if they understand anything, we need to reduce the carbon in the world. Yay! You're going to need pipelines to do it. Okay. That brings up the next one. Alberta's prime minister gets some retaliation. Kenny, he's upset, and I've got about 6 different numbers here, but there are a lot of jobs that just got caught in the first day of Biden's presidency. I've heard rumors of 2,000. I've heard another 8,000. And quite honestly, I think Alberta has a right to sue us, and I hope they get every dime they can. We need that pipeline for hydrogen. We need that pipeline for national security. All right, I'm going to calm down. And here we go. We're going back to Libya. Okay, Michael, you and I have talked about Libya for a while. Mm-hmm. They are broke. They are desperate, and now they are asking for foreign investors to fix their ancient infrastructure. They have their pipeline is 60 years old. It may be back on in 10 days, but they are doing 1.3 million barrels a day this month outside of the treaties, outside of OPEC. That I don't understand how OPEC can keep any of their children in line.
No, it's gonna be super tough.
That's all
I'm gonna say. It's got to be super tough.
All right, last story, Michael. ExxonMobil, you get this one over to me. They're in talks on to sell their whole North Sea assets to Norway. Norway is a big friend of ours of the show. There's possibility of negotiations, may not include an agreement. ExxonMobil was one of the pioneers of the UK. This is not a surprise on ExxonMobil, Michael, because they're getting out of oil and becoming an energy company. Back to you.
Yeah, that's exactly what they're saying. They're getting out of oil and becoming. I mean, that's what you can say about super majors around the world, Stu. And you've been on that for a while and appreciate it. Thank you. All courtesy of the world's greatest website, EnergyNewsBeat.com. Finally, on the U.S. side, we've got some news to talk about. I wish it was better circumstances, though. The 3 stories or the 4 stories I've got outside of extraction coming back from here, they're all kind of sad. So we'll just pick our topic here and start with Joe Biden canceling puts a freeze on federal drilling permits and leases. The 60-day suspension on approval is necessary for, quote, targeted and time-limited review of the recent decisions, the U.S. Interior Department Acting Secretary Scott De La Vega said in order signed yesterday. The freeze will apply to permits, leases, easements, and federal land management. Producers holding federal leases will still be allowed to continue drilling wells that use using the more than 5,600 unused drilling permits that were amassed over the 2 years. It's the secret behind it was people have been stacking permits on federal leases for years, Stu. For 2 years now. What?
Yes. That bloat or glut of the back leases will keep the wells coming in against the depletion rates. So we're good for about 2 years.
The problem is, Stu, what this does is targets 2 states. It targets Wyoming and New Mexico, who have 73% of their oil production is on federal lands. They pay 30% of all federal oil and gas royalty. Now, the other 70% comes from offshore leases. Now, that's going to be very interesting what happens with offshore leases. We haven't even gotten to that point, but this is such a predatory, in my opinion, rule that only hurts two states. If you wanted to create a proactive oil and gas rule, do it for everybody. Don't just do this. And New Mexico's even Democratic. They're your friends theoretically. So this is where you start mixing energy and politics, and it doesn't go well because now all of a sudden I don't want to get too riled up, but this is, in my opinion, this is predatory against Tuesday. And my heart goes out to Wyoming operators, the Wyoming people who, if you are a Wyoming citizen, if you go to high school in Wyoming, you can go to a state school for free. Do you want to know why? Oil and gas, because of all the drilling that's happening on the state right now. That could be gone in 10 years. So get your talk about free education. We're all about cancel student loans. The one state that gives out free education, you're going to now retroactively punish. I have to stop because this will get me absolutely heated. But this is what just grinds my gears when some of this stuff comes with policy. It infuriates me, too. Because I worked Wyoming. The one job I had that was in the oil field was in Cody, Wyoming. I know Wyoming. Those are salty. Those are good people.
Great people. And if you wanted to take a look at working with people to better humanity, let's work together with the industry to lower carbon, advance everything. Let's all work together, but you got to talk on both sides in order to do that.
Yeah, and again, there's no thinking behind these rules. It's just politics. So at least we can chalk it up to that. If they were thinking, I'd be concerned. The lucky part is I don't think any of them are thinking. So we can at least rest assured it's only politics, and they're not actually like, this could make it better for us. So, we can at least go there. All right, bearish API news before I go ahead and jump off a cliff here. Raised 2.56 million barrels. It's partly why, again, we saw crude oil kind of be pulling back and forth. Some of this vaccine news, getting people back to work, moving around. That's going to buoy oil prices up, but really pulled back. Interesting raise. It'll be interesting to see what the EIA puts out tomorrow. Remember, we get both natural gas and crude oil inventories tomorrow, so it's going to be a hot show. On the M&A side, or I should say the bankruptcy side, back from the dead, Extraction Oil and Gas, they have emerged from Chapter 11 bankruptcy, name a new CEO and a new board of directors Wednesday as it completes its 6 months of restructuring. Industry veteran Tom Tyree, who's been the executive chairman of Denver, who's been the executive chairman of Extraction ever since bankruptcy, is now the new CEO. Co-founder Matt Owens, Mines baseball alum, gotta love it. Owens remains president and CEO, didn't get axed, even though he's the guy who was running the show when it ran him into bankruptcy. But hey, it's all right. I'm a Mines baseball alum as well, so we stick together. But we also sometimes do tell the facts. Well, I'm all about job security right here. He doesn't need to be added to the unemployment line. A new extended Extraction 7-member boards led by Benjamin Dell, friend of the show. We love him. He's a managing partner over at Kimmeridge. We know Kimmeridge from what? Their activist investor positions in Ovinton, the artistly formerly known as in Canada. They're also talking about PDC, and I think they also have some stuff. It's another country that I think there was 3 other companies they did, but when I read this release, seeing that the guys over at Kimmeridge are now running the show, it's thumbs up for me, because it really, that means they're going to focus on fiscal responsibility. They're going to be smart with the dollars they spend, and these are, not to say that, because I think there's this tendency to say, do finance guys make better oil CEOs, or do operations guys see more CEOs? It's really this tug of war. You see operations guys, you kind of see these swings. If an operations CEO takes a company under, well, finance people usually bring it out of bankruptcy, and vice versa. We see coming out of bankruptcy, Matt Owens, the former petroleum engineer, turned CEO. Now we see the private equity coming and take over. So I look for these people to be fiscally responsible. They're gonna play below their means. Are they going to be acquiring acreage too heavily? I don't know. Stu, you're smiling over there. What do you got? Okay,
the accounting side, they have mouse defibrillators now. Clear.
They're back, baby. They're back. No, I mean, Extraction is good. I don't want to say great wells. They've got good acreage. They back up to some good stuff. For me, it's just, you have your revolver. To give you guys an idea, they freed itself from $1.7 billion in debt. Upon exiting bankruptcy, they had a $1 billion lending facility, and they had an initial borrowing base of $500 million, which matures July 2024. They drew $264 million upon reemerging, adding to their $11 million cash basis. About 99% of the new shares were issued to unsecured claimants and debt no-holds from when Extraction entered bankruptcy last spring. So they're back. We'll see if anything changes, but I do like the direction. I mean, you haven't been down in charge, but I like that move right there for one reason. I just think they're going to be more fiscally responsible as they move forward. All right, last story. We mentioned yesterday, it's oilfield service season. Yikes, Baker Hughes, they're down 1 full percentage points, currently trading 22.65 after losing 7 cents a share, a company posted a net loss of $50 million, but they also, for some reason, generated free cash flow of $500 million. Again, when you're reading these press releases, it just reads like sometimes it's like, well, I just read up there this, but now down here that. Okay, well, fair. I'll just take it as it comes. What we do know is revenues came in at $5.5 billion for the quarter, down 13% year over year, slightly ahead of what analysts expected at $4.4 billion. Orders totaled $5.2 billion, down 25% year over year. It's not a bad number. Orders means how many, basically how many amount of orders, how many people are buying, all that. Just a good number to know the activity level on the E&P side. Only down 25%. It's not terrible. It means someone's turning around. Cash flows generated from operating activities, $378 million. A non-GAAP free cash flow, as I said, was $250 million. But then then the next statement is this, Stu. So literally it goes, cash flows generated from operating activities were $378 million for the quarter. Free cash flow for the quarter was $250 million. Then literally the next statement is this. In a statement from the CEO, Lorenzo Simonio, noted that the company generated more than $500 million in free cash flow. What is it, man? What is it? Just level with me here. Both of those numbers are not terrible considering it's COVID. So just when you're reading these press releases, watch for little things like that. This is courtesy of the street. Obviously, they're just pulling it via the press release. It just cracks me up, Stu. It just cracks me up, and I'm still thinking about the federal permitting stuff. It's still just that absolutely gets me, Stu. Do we miss anything today?
Well, you know when an IR guy is lying, don't you?
Yeah, I mean, it's easier to tell. When are they telling the truth? And I love IR people. They got a job to do, but they're spin doctors.
No, they don't want to be salesmen. Hey, great job today. Appreciate you. We'll see you later.
Yeah, and with that, guys, we're going to let you get out of here, get back to work, finish up your day. Thank you for checking us out on the world's greatest website, EnergyNewsBeat.com. For Stuart Turley, I'm Michael Tanner. We will see you guys tomorrow on the